You're here because XRP and XLM feel like the biggest contradiction in crypto. The narrative keeps getting stronger, but the price still acts dead. Most people see that and assume nothing's coming. But markets don't stay this quiet for no reason. They stay quiet when positioning is lopsided, liquidity is thin, and price is being compressed into a range that can't hold forever. Before we start, this is not financial advice. This is education and market commentary only. Right now, XRP is hovering around the low $2 area. And XLM is sitting around the mid 20-cent area. And that's the mispricing question. Because while price has been sleepy, the backdrop changed in ways most people still haven't mentally updated. First, the biggest overhang on XRP for years was regulation. And recently, that legal story finally took a major turn. That doesn't mean number go up tomorrow, but it matters, because liquidity behaves differently when a big cloud disappears. Institutions don't need to love XRP. They just need fewer reasons to avoid it. Now zoom out. Markets don't price what's true today. They price what they believe will still be true tomorrow. And the market's current bet is basically this. XRP and XLM will stay boring. Nothing changes. That's what mispriced looks like in real life. So let's go to the chart logic. Without hype. When an asset spends years chopping sideways, it's not random. It's a long-term negotiation between buyers and sellers. And the longer that negotiation lasts, the more violent the resolution can be when one side finally loses. Compression builds pressure. And pressure doesn't release politely. Think of it like a spring. The more you compress it, the less it moves gradually. It either holds, or it snaps to a new level. Here's your first practical takeaway. You don't need to predict the breakout. You just need to know the two conditions that tell you whether the market is still trapped or whether it's actually escaping. Condition 1 is structure. Price keeps putting in higher lows while repeatedly tapping the same ceiling. That's the market quietly spending supply at resistance. Condition 2 is liquidity. Once price clears a multi-year ceiling, there are often thin zones above. Areas with less historical trading, where price can travel faster than people expect. That's why these moves hurt. Not because they're impossible to catch, but because they don't give you time to get comfortable. Quick rehook. If you've ever watched a coin move 30, 40, 50% in a short window and thought, how did that happen so fast? It usually started exactly like this. Quiet. Then sudden. So why does XLM belong in the same conversation? Because while XRP's story was legal clarity, XLM's story is real rails. Real usage. Real integrations. Again, that doesn't guarantee price. But it reinforces the idea that Stellar isn't just a ticker symbol. It's a network institutions can actually use. Now tie it together. XRP and XLM can be mispriced when the market keeps valuing them like dead retail coins, while the real world keeps nudging them into Rails coins. That gap, between perception and reality, is where repricing can happen. So what should you watch right now, if you want real value from this video? You're watching for the moment the chart stops being a range and starts being a trend. The most common trap is thinking every green candle is the breakout, then getting chopped to death. Instead, watch the sequence. A clean push above the ceiling. A pullback that doesn't collapse. Then continuation. That's the market proving it can hold new ground. Simple mental model. In ranges, rallies get sold. In trends, dips get bought. That's the flip. That's the script change. Second rehook. Most people don't miss the move because they weren't smart enough. They miss it because they were waiting for it to feel safe. But the breakout never feels safe at the start. It feels like a fake out. Until it doesn't. If XRP and XLM keep chopping, you don't need to force a narrative. Let the market prove it. But if the ceiling breaks and holds, and the move starts getting supported, the conversation changes from why isn't it moving to why is it moving so fast. That's where mispricing corrects. Quickly. Last point. Don't confuse utility with price immediately. Utility is a slow engine. Price is an emotional engine. Repricing happens when both engines fire in the same window. So the real question isn't will it moon? The question is the market still stuck in the old assumption? Or is it about to update its belief?